So macro investing is best summed up by the word denial. So, and people will interpret this two ways. People saying, yeah, the market's denying that it should go lower because earnings are going to be revised lower and we're going into recession. And my version of that is, yes, tell me something I don't know. And markets are pretty clever. They forward look. So when I look at the macro data, I'm expecting a recession. Now, I understand it seems a bit not very clear because unemployment's not moving yet, stuff's happening, but all my forward-looking indicators suggest that we're going to go into a recession. But what is unexpected, it looks like it's not going to last very long. So the forward-looking stuff based on liquidity, and I'll come into why this is important in a sec, is actually saying that after about April, things start improving. So we go into the vortex now of everything's going to feel terrible, the unemployment's going to start rising, all of the data is going to come out bad. But the market, I think, is forward-looking this turn in the data. And we've seen it with the Federal Reserve. The Federal Reserve kind of got to the point where we're kind of almost done. They've gone from 50 basis point rate hikes to 25 basis points, and then it'll be stopped. Last time it stopped, Bitcoin went up 300%. ETH did about the same. The rest of the markets rallied significantly. So I think that's where we are. We're at the juncture where the markets are sniffing out the turn. That something is changing, inflation is going to start falling, and the narrative is going to shift towards we're in recession now. And that's when everybody thinks, well, we should be maximum bearish. But actually, the markets are forward-looking and start discounting an improved situation, whether it's more stimulus or rate cuts or whatever it is, at least the Fed stopping raising rates, killing all of us.
Traders betting on a market-wide decline were caught off guard as a broader market recovery in the past 24 hours saw $185 million in shorts, or bets against price rises, getting liquidated. That contributed to over $200 million in overall liquidation losses. Liquidation refers to when an exchange forcefully closes a trader's leveraged position due to a partial or total loss of the trader's initial margin. It happens when a trader is unable to meet the margin requirements for a leveraged position, fails to have sufficient funds to keep the trade open. Hello and welcome to Money Talks. In today's video, Real Vision CEO Raoul updates about his outlook for Bitcoin in 2023. Raoul also breaks down the importance of regulatory clarity in the space and how it will drive the future of institutional adoption in crypto.
So how does this all work between macro and crypto? Because that's the important thing. Because people are like, well, why do I care? Well, you need to care because liquidity, which is the amount of money in the system, the rate of change of the money that actually matters, that's what drives crypto cycles. I don't even think it's the halving at all. When I actually match up the peak in Bitcoin cycles, it exactly matches the peak in the ISM survey, which is the business cycle. Why? Because it also matches the peak in the liquidity cycle. It just so happens that the liquidity cycle since 2009 has been about 3 and a bit years between each time the economy. And there's a lot bigger macro discussion about why that is. But I think that crypto is just the liquidity cycle plus the secular adoption trend. So, when we all put that logarithmic trend up and it gets rid of all of the noise of the big sell-offs and rallies, we know that actually it's a pretty steady rise over time, right? That's the adoption of the technology. That's the game we're all really playing. But when you put it to the normal chart, it does this a lot. The thing that drives this is the liquidity in the system, the amount of money coming in the system. Okay. So now, people say, yeah, but look at US M2. It's the lowest it's ever been. M2 growth year on year. It's the lowest it's ever been. Yes, but the forward-looking stuff like Chinese money supply growth and credit has led our cycle by about a year. And that started rallying strongly. So we're starting to see the point that liquidity is going to come back into the market. And that makes sense because if the Fed are going to stop raising rates, that's going to make things feel a little bit better, money will come a little bit back into the system. Even people start buying bonds again and money starts getting recycled. And that means that the M2 will start picking up. And lo and behold, crypto will. Because that's what drives these big up and downs. Not the halving cycle. It's all about macro, which is why I've always been a big proponent of the fact that crypto is macro and macro is crypto. They're all part of the same thing. We're playing two things. One is an adoption of a technology at scale, one of the fastest adoptions of any technology in all history. And the volatility is driven by the liquidity cycle.
Bitcoin-tracked futures saw over $85 million in liquidations alone, the highest among all cryptocurrencies. Ether futures logged $58 million in liquidations, while futures of Aptos, Solana, and Solana each saw losses between $3 million to $4 million. Crypto market capitalization increased 8.8% to reach its highest level since November, erasing losses from the contagion effects stemming from FTX's collapse and troubles at crypto lender Genesis.
It's the same for the economy as it is for crypto. So the economy will feel like winter time for a bit, and then spring will come. Crypto forward looks it by about 6 months, maybe 9 months, because ETH bottomed in June, Bitcoin bottomed in October. So we got that kind of 6-month lead time. So crypto's already in spring. And spring can be pretty amazing. So if you go back and look at crypto spring in 2019, as I said, both ETH and Bitcoin did 285%. Then they backed off quite a long way for a while, even when the Fed were cutting rates and they stopped quantitative easing. They stopped quantitative tightening and moved to quantitative easing. It actually backed off a bit from then. So let's go back to the previous cycle, the 2014-15 period. That saw similar. But actually what happened was we had this first spring. Then we had this season transition. Now, 2018 and 19 was actually quite a big sell-off over time. 2015, 14 was sideways from this big wedge. And then it all broke higher. And so it's giving us a structure of how these things look like when liquidity comes back. This is not a mystery. It's a liquidity cycle. So it's going to be some form of rally, probably a lot further than we are now, best guess. Consolidation, sideways or down, who the hell knows? And then as the economy continues to be weak and we go into an election, well, lo and behold, they're going to be giving out money again in certain ways, whatever way that is, whether it's tax cuts or anything to create liquidity in the system because you want to win an election. So it's like the same setup all over again. And that's probably why we keep seeing these setups, because it's driven by this liquidity cycle. And every time the Federal Reserve have been doing the same thing, they've either been trying to tighten rates or the economy slowed down and they need to pick it back up again. So it's interesting. So spring is where we are, and we've only just started.
Bitcoin and Ether rose to over $24,500 and $1,600 respectively, leading to a market-wide recovery. OKB, the native tokens of crypto exchange OKX, surged 20%, the most among major cryptocurrencies, while BNB chain's BNB rose to $323 in Asian afternoon hours, reversing losses from earlier this week.
So you kind of either buy now, and this is where the market is struggling with this, because few people have flipped out because they made some money, got called the low. The people with shorter term time horizons. Others like it's overbought, but usually these kind of conditions are where you tend to get these crazy legs to the upside because everybody's underweight because everyone's got the same thing as you. Is I don't have enough spot. Oh shit, what do I do? Then you have to FOMO in and you'll end up FOMOing too high. So this is how it is written. It is always this way. And so my best guess, and I don't know, I don't have a crystal ball, but usually because it's set up like this, the path of most pain is higher. And then once everybody goes, right, it's going, it's running, it's usually when this correction happens. So do you get another chance to buy it again at these levels if you miss it now? maybe. We don't know if it has that downward correction or the sideways correction. You will get up time to buy it after a consolidation later. But really, I would be, and this is what I've been doing, is buying, I was buying from June onwards as much as I could with any cash flow I got, because I'm still fully invested in crypto. I never sold anything. But I've been, any cash flow I can, just putting it in is, okay, even now, I've just put money in recently, expecting a higher move. And then if that consolidation comes, that's when I would add some more again. So if you're a longer term time horizon player, I'm not talking about the short term. I don't know. Maybe I'm wrong. Maybe you're right. But I don't find this a bad level to dollar cost average or just put a chunk in and realize that there is going to be times where it's going to correct again. But the low is in.
So is it a good time to invest in Bitcoin? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.